Okay, hey guys, just wanted to make an educational video of what I look for in a trade. I had some requests from some of my viewers, so I'm going to make a little video of just that. So, as you know, my main screen has a regular bar chart, 5-minute bar chart, and a market profile chart. So before any day, I always highlight the key areas on the profile. We have one in and around the 1.40 tens. So let's highlight that on the bar chart, right about there. And we also have one near the low of this day, which is really, yeah, the low 1.3942. So we're going to draw one of those, 1.3942, right about there. Okay, now we're going to highlight some of the important areas on the bar chart. So we have this low right over here. Let's draw it. Okay, let's draw it right here. So we have this area, and we have this area really, which is the only ones I'm watching. Unless this area this area breaks, then we have a level up here, and obviously the high. So these are the levels we're going to be watching. Um, I I personally took a short over here. Now, my logic in this short trade was that we were downtrending. Obviously, on the profile, you could see value was here, here. You could see these points of controls shifting lower, indicating that value is shifting lower, which is in a downtrend. The only time we want to be considering long trades is if this high volume breaks. But it hasn't yet, so we have to be on the short side. So taking a short trade here was a good idea. Why? Because you had an amazing reward to risk. Your first target was the high volume here. Your second target was the low volume here. And your third target was a runner. While your stop only had to be a few ticks above this high. So really you risked maybe 10 ticks to potentially make 30 on the first and 70 on the second and possibly more on the third, depending how many contracts you trade. Now, a lot of traders, what they'll do is they're gonna get in here, and what they're looking for is at 3 minutes it to go from here to here. That's not gonna happen. You have to let the market play around. So you can see the market afterwards just kind of channeled, and then we had a break. Now, how would we move our stop? So our stop was over here, and we've hit our first target. Now, are we going to leave our stop up here? No. We know a high is in place now here in the balance area. So we want our high, we want our stop above the high just in case the market reverses here. On the other hand, you do not want to see the market bounce like it is here, break above it, and bounce here. That's when you would put your stop lower again, and that would indicate an uptrend may be forming. So let's see what happens. We know there's volume in this market. Okay, we are starting to break this low, so our second target is hit, and you kind of want to have you probably want to move your stop down. I mean, you're in the money by a good amount. So you could either place it above this balance area that formed, or above this important level that we identified, depending on your risk to reward tolerance. So we're seeing volume pick up at this low, and we are really starting to break down. Once again, there's no reason to get out of this trade that we entered over here. Look, a lot of people say that you had to be a magician to short near the high, and you don't have to, because you will get stopped out 10 ticks maybe 3 times before you have one trade where you make 150 ticks, which blows that out of the water. So now you want, now once again, there's no reason to get out of this trade. We saw balance form here, stops above here, balance formed here, stops above here, balance is formed here. Let's see what happens with this balance. Now let's look at the profile actually as we're following. So we're right near this area on the profile. Let's look back. It looks like we're in nowhere. We're just falling down. It could keep going. So once again, no reason to get out. Now depending on your risk reward tolerance, you might have gotten stopped out right here, or you might put your stop here and let the rest run. But depending on that was a very big trade, wiping out all your previous losses. For example, let's look here. Many people might have been buying this low here. All you needed was a stop right below here, and your targets were up here and up here. Using this method, the risk to reward is always better than 1-to-1. The best trades you're gonna get are even 10-to-1. You could even get 20-to-1. Usually, the minimum you're gonna have is 2-to-1. So that means even if you have 2 losing trades, you can make it back on 1, and usually more. So that's what I look at for a trade. This is recorded in HD. So if you're gonna watch this again, watch it. Make sure to watch it at HD. All my videos will be in HD from now on, so you may enlarge the screen for better quality. Thanks for watching this video.